Hello and welcome to Gym 105, Stock Selection Guidelines. In Gym 101, we laid out the mechanics of the wheel. In this video, I'm not reteaching those mechanics. I want to focus on something even more important, choosing stocks that actually work with the plan. Quick disclaimer before we begin. This video is for educational purposes only and should not be considered financial or investment advice. Always do your own research and consult with a qualified financial professional before making investment decisions. Past performance is not indicative of future results, and all investing involves risk. Before we talk about deltas, expirations, or premiums, we have to start here. The wheel doesn't begin with strikes or dates. It begins with choosing the right underlying stock. Get this part wrong, and everything downstream gets harder. Liquidity is non-negotiable with the wheel. We want stocks that trade actively with tight bid-ask spreads and liquid options chains. If a stock is thinly traded, you'll give up edge every time you enter, adjust, or exit, and that adds up fast. If liquidity isn't there, I don't care how good the premium looks, I'm out. With the wheel, assignment isn't a mistake, it's part of the plan. That means fundamentals matter. I'm looking for real companies with real businesses, ideally profitable or at least generating cash flow. I don't need perfection, but I do need confidence that if I'm holding shares, I'm not relying on hype or hope to get out. Premium doesn't come from nowhere. It comes from volatility. We want stocks with enough movement to pay us for taking risk, but not so much that every trade feels like a coin flip. Too little volatility and the premium isn't worth it. Too much and the wheel turns into constant damage control. A stock can look perfect on paper and still be wrong for you. The share price has to fit your account and, more importantly, your psychology. If you're stressed about assignment or constantly watching the position, that's a signal that the stock is too big, not that the strategy is broken. The wheel only works when you can stay calm and consistent. Everything we just talked about only matters in the context of a plan. For this series, that plan is cash secured puts around 40 delta, 30 to 45 days out, with the willingness to take assignment and manage at roughly 50% profit. I'm not reteaching the mechanics here. I just want to make sure the stocks we choose actually work with the plan we've already laid out. Let's wrap this up by pulling it all together. Stock selection matters because the wheel doesn't start with an option. It starts with the underlying stock. Liquidity comes first. If you can't enter and exit cleanly, everything else becomes harder than it needs to be. Fundamentals matter because the assignment is part of the plan. If you're owning shares, you want confidence in the business, not hope. Volatility is what pays us, but only in the right amount. Too little isn't worth the effort, and too much turns the wheel into constant damage control. It also has to fit you, your account size, and your psychology. If you're not comfortable owning 100 shares, that's a sizing problem, not a strategy problem. And finally, all of this has to fit the plan. Cash secured puts around 40 delta, 30 to 45 days out, with a willingness to take assignment and manage at roughly 50% profit. When the stock fits the plan, the mechanics get easier and consistency follows. I say that because with the wheel, the stock choice dictates everything that follows: liquidity, premium, assignment risk, and how recoverable the position is. The option is just how we express that decision. I'm not reteaching the mechanics here. I just want to make sure the stocks we choose actually work with the plan we already laid out. As always, trade the plan, not the panic. See you in the gym.